Good evening, traders. Today I want to talk to you about what makes the price of the Forex market move. As you can see right here, I've got the chart up of the Euro US dollar. I'm looking at a 30-minute chart. And today at around 2 o'clock in the afternoon, you can see the market here, the high at this block on this 30-minute candle. Each one of these candles represents 30 minutes in time. In this range right here is what it did during that corresponding 30 minutes. The green candle means that it was higher. The closing price of this 30-minute block was higher than the closing price of this 30-minute block. The red candle means that the price was lower than the previous 30-minute block. Okay, so about 2 o'clock this afternoon, the price shot up from this block right here in about an hour and a half's time. It went up 24 pips. 24 pips is a pretty good move. A lot of times currencies will not go up or down 24 pips in 24 hours, much less an hour and a half. So what made this happen? Well, today at 2 o'clock, the U.S. federal government made an announcement on interest rates. And it had to do with leaving interest rates the same. And the Forex market took this kind of as being better news for the euro and worse news for the U.S. Now, why would this be? Well, in Europe right now, they're kind of coming out of the COVID restrictions, and their economy is starting to crank back up, and people are going to work, and their factories are producing products, and this is generating revenue for the European countries. Here in the U.S., we're also kind of coming out of the COVID, but right now a lot of factories are having a hard time getting workers to work, to show up to work. And a lot of factories are not producing products as many products as they should because they cannot get the labor force to do it. That's why some of the prices on some of this stuff is really skyrocketing. The price on lumber, the price on steel, the price of steel has doubled in about the last couple of months. So that's why. So you say, well, if you were on the wrong side of this trade, if you decided to short the Euro US dollar right before this trade went up, and you would have wrote it out at 24 pips, that would have been a pretty good loss. As you can see right here, I have a one lot queued up, which controls $100,000. Well, it's 100,000 euros, excuse me, which means it's $10 a pip. That's the move. So if I would have stayed in that trade and had it go against me for 24 pips, that would have been $240, a loss. So if you'd have been long, obviously it'd have been a $240 winner. Well, you ask yourself, well, how do I know when these big announcements are coming out? So let me change screens here for this right here. You go to this website right here, babypips.com. And once you get there, you click under calendar. And what that will do, this is the first thing I do in the morning before I ever place a trade, is I look at this economic calendar. And we're going to look at Wednesday's calendar, today's calendar. And you're going to see here at 2 o'clock in the afternoon, the federal funds at 2 o'clock, 1400 it's military time. So at 1400 at 2 o'clock in the afternoon, the U.S. government federal funds rate was going to be announced. They anticipated it being at a quarter of a percent. It stayed at a quarter of a percent. This was a high impact announcement to the Forex market. As you can see here, there's a lot of announcements that happen during the day. Now, some of them have a low impact. I don't even worry about those. Some of them, as you can see here, have a medium impact. Well, in this one, it happened at 6:45 at night. I'm not even trading the market at 6:45 at night. And it was New Zealand. If I'm not trading the New Zealand dollar, it's no big deal. But it was just a medium impact. I really don't pay much attention to the medium impacts. It's the high impacts that I want to pay attention to. Okay, let's go back to the chart here. And I want to talk a little bit about what normally makes the markets move. As you can see, the markets really haven't changed a whole lot during the course of this video. And because the Forex market changes price, it's almost like negotiating for a car. You drive by a car dealership and you see this car on the lot and you say, man, it's a sharp looking car. I'm going to stop in, take it for a ride and see what they want for it. Well, you go in, you take a ride and you say, man, I like this car. And you ask the dealer, so how much you ask? And he said, I need $10,000. And you, I'm not going to give you $10,000. It's too much. I'll give you $8,000. And he said, oh, I can't sell it for that. And you go back and forth on the price. And you meet in the middle, we'll just say, for this discussion, and you agree on $9,000. The Forex market's the same way. How much do you give me for how much are you willing to pay for the euro US dollar? Well, if you want to buy it right now, you got to pay $1.21.32 8 of a cent per euro. In this case, if you're trading a one lot, it's that times 100,000 euros. Okay. The Forex market has about a 50-to-1 ratio of money, so you don't have to put up that kind of money. We'll talk more about that later. But just if you take anything out of this video, it's to look at this economic calendar before you place a trade for the day, so you don't get caught blindsided and on the wrong side of a trade. Hope you enjoyed it and learned something.